Let's get going here. All right, so assalamu alaikum, everyone. Thank you so much for coming out today. My name is Shamel. I am the financial advisor at ShariaPortfolio Canada, and that is Nadeem. He's our portfolio manager at ShariaPortfolio Canada. And obviously, I'm sure most of you are familiar with what we're going to go over today, but we are going to go over the importance of retirement planning. That is the main concept of today. And yeah, let's not waste too much time and just kind of get right into it. So let's go to the next slide here. So a quick disclaimer before we do get started. Anything said today is not official financial advice. We do recommend that you do speak with your financial advisor before making any investment related decisions. So next, we're just going to go over the agenda really quick. So the agenda for today, first off, Nadeem's going to go over kind of who we are at ShariaPortfolio Canada, how long we've been around, kind of what we do. Next, he's going to transition into the importance of retirement planning. And also that's going to include the process of kind of how to plan for your retirement. The next thing we're going to talk about is the tools for retirement and the time value of money. And lastly, we're going to go over how to get started. And if you have any questions or answers, we'll be happy to answer them throughout the presentation and at the end. I do recommend that any questions you may have, put it in the chat box below. I'm going to try to answer them some as the presentation is on, as well as at the end with Nadeem. So without further ado, let me introduce Nadeem. So Nadeem began his career with Oppenheimer & Co., a mid-tier Wall Street investment firm. After returning back to Canada in 2002, he had roles in private wealth management with firms like HSBC, Canaccord, and RBC. And he joined us at ShariaPortfolio Canada in 2019. Nadeem graduated from Concordia University with a Bachelor of Commerce in Finance, and he does hold a CFA designation. Nadeem also does have more than 20 years of experience in the space, and I'm sure he's very excited to go over everything with everyone today. So Nadeem, take it away.
Thank you, Shamil. Assalamu alaikum, everyone. Thanks again for joining us. Bismillahirrahmanirrahim. So I'm just going to start off the presentation. First of all, welcome to everyone. If you're new to ShariaPortfolio Canada, we've been doing a series of webinars since we've kind of got registered in Canada. If this is your first webinar with us, again, we welcome you to our webinar. If you are a returning attendee or a client or kicking the tires on us, we obviously welcome you back. Just a little brief background as far as who ShariaPortfolio is. The parent company ShariaPortfolio actually got started in 2003 under the name Virgi Investment. That's from our founder Noshad Virgi. At that time, he specialized in ShariaPortfolio management services, but mainly kind of managing family and friends as his clients. Ultimately, as the demand grew, the company really started to take off, in around 2014, where we went from 5 states to 26 states. We got registered as a investment advisory firm with the SEC, which is the U.S. Securities Exchange Commission. And alhamdulillah, with the growth that we got, the demand in Canada also started to creep up. Alhamdulillah, we have a vibrant and a growing Muslim community here. And with the demand kind of came ShariaPortfolio kicking the tires on expanding into Canada and providing the Sharia compliant wealth management services to our community. So within the next 2 years, from 2017 to 2019, the company really kind of started to get our ducks in order to get registered properly in Canada. So we did that, and alhamdulillah, we got our registration from the Interior Securities Commission in January of 2020. So with that, it was an exciting time. We also have a sister company which operates as a separate subsidiary, that's SP Funds. That's the company that kind of has our asset management and our ETF business. So with that, we are here today. 2020 was our first year into Canada. Alhamdulillah, the demand has been great. We're extremely flattered for and appreciative of all the clients that have joined us in the first year, and we look forward to building new relationships and new partnerships going forward, inshallah. So with that, I'm going to kind of go into the topic of today, which is the importance of retirement planning. So I guess starting off with an Islamic perspective, and I think this is very important because, uh, Islam does encourage earning a livelihood. It is an obligation for us. And what I did was there are a couple of verses and a couple of hadiths that can kind of speak to this. So, number one, in the Quran, chapter 28, verse 77, it says, "But seek through that which Allah has given you, the home of the hereafter, and yet do not forget your share of the world." So, I mean, kind of speaking to wealth creation, meaning to say, of course, we should be focusing on our deen, but don't forget the dunya and your share, so to speak, in this world. And then specific to retirement and estate planning, I found a couple of hadiths that can kind of speak to that. This is from Sahih al-Bukhari, where it says, I quote, "You'd better leave your inheritors wealthy rather than leaving them poor, begging others. You will get a reward for whatever you spend for Allah's sake, even for what you put in your wife's mouth." So, subhanallah, what I think this is really kind of telling us is, you know, to plan ahead, to plan, for not just a state, but even during those years in your life where you are not, in those peak wealth earning years. And so, to build a wealth and not, so to speak, become a burden or to be dependent on others, right? So again, it's all about, speaking about planning. And the last one that I'll speak to is really just about protection and management of wealth. And this is from Jamia al-Tirmidhi, and it says, Anas bin Malik narrated that a man said, "O Messenger of Allah, shall I tie and rely upon Allah, or leave it loose and rely upon Allah?" And he said, "Tie it and rely upon Allah." Now, what the context of this hadith is about a camel. And I think what's important here is, as a finance guy, as a wealth manager, it does kind of speak to protection. It speaks to wealth management, meaning that to say that, we should trust in Allah subhanahu wa ta'ala, but at the same time, it's always wise to do the right thing and, believe, but, tie, meaning to say, manage your risk, protect your wealth. And you know what? And that's something that I think ShariaPortfolio actually prides itself in, is that we do believe that, we are not just wealth managers, we are also risk managers in helping, our clients, grow and protect their wealth, inshallah. So that's just some Islamic perspective on as far as planning, investing, wealth, where I thought, it'd be important to kind of highlight, because again, the theme of tonight's webinar is about the importance of retirement planning. So now a dunya perspective. Okay, so this is stuff that is pretty much in our face on a daily basis. What are some of the reasons why we should be planning for retirement? Of course, we cannot work forever. What we're also noticing in the demographics is the life expectancy age is increasing. People are living longer. If you're living longer, that means you need to be able to take care of yourself and plan for that. We're having higher complications. Of course, we're in the middle, unfortunately, we're in the middle of a pandemic. But even besides that, we are starting to see that, because we're living longer, just because you're living longer doesn't mean that, you're living without complications. Complications will come with age as well, unfortunately. And at the same time, just because you're retired doesn't mean that, there's nothing else to do, for you to do in this dunya. I think, this is a time to kind of fulfill aspirations. A lot of, some of our clients in their retirement years are doing great work on the charity front. And I think that's, again, that's an aspiration that they'd like to do. And it's important to have, it's important to have some wealth and some monetary wealth for you to be able to fulfill some of these objectives, right? And just kind of going through the list here, relying on one source of income is risky. Yes, some people do have a pension or are looking at CPP or something of that sort, where they feel that, okay, you know what, when I retire, I'm entitled to get a certain amount. That's great. But, we think in the environment that we live in, just to be dependent on one source of income can be actually a risky thing to do. do not depend on children. I think this is a big one, especially for our community. I think what we're seeing here is a big social change in terms of how maybe my parents and my grandparents, plan their retirement year versus how the new generation is doing. And what I mean by that is, back in the old days, I guess, my background, my parents are from Pakistan. It was always about you retire, and you know what? Chances are the parents will go with the eldest son or whatever, and that kind of becomes their last, that becomes their retirement stage, so to speak. And so I think what's happening is we're having a change in attitude where today, although we love our kids and we love our parents, that might not be the number one option. In fact, some people that are retiring are don't want to live with their kids, not because they don't love them, but because it's a social change that's going on within us, right? Contribute to the family even during retirement. Again, staying active even in retirement years. I think that's something that people want to do, and of course, start planning early and diversify your investment. That is probably going to be the theme of tonight's webinar. So again, covering some Islamic perspective on it, and at the same time looking at some of the dunya perspective on it, as far as what's happening now in our face and why it's important to plan now, right? So tools for retirement. Now this, if you guys were with us last week, we did have basically an RSP versus TFSA type of a webinar where we did introduce a lot of the 101s on what an RSP is and what a TFSA is. I obviously welcome anybody who didn't attend to maybe go to our website and replay it, and I will kind of skim through this quickly here, but the main thing here is this. I mean, there are some basic tools for retirement, and these tools are really types of accounts. So the first foremost thing is the retirement, the RSP, the retirement accounts. There are various types. We have a self-directed, a spousal, group, LIRA. These are all the types of accounts that are covered during pre-retirement. So the accounts that you will either contribute to or that's invested, that is building or growing to the day that you retire. Now, eventually when you retire, it does convert into what's called a registered income fund. And that's kind of like the third bullet point here, or a life income fund, or a locked in retirement income fund. And again, all these these RSP accounts kind of getting converted over here into an income fund, where now you are starting to withdraw from your RSP and it becomes quote unquote an income fund. So again, these are tools that you need when you're planning for retirement. So again, the RSP account serves as the pot that you're putting your investments into that grows. And then ultimately, when you are at retirement, post-retirement, that pot then becomes what I call an income fund, and it gets moved over and you start withdrawing from it. We have pension plans and defined benefit plans. These are basically employer-sponsored retirement plans. Some of you, for example, if you work for the government, you'll notice, or if you're a teacher, for example, here in Ontario or any other province for that matter, you might see that you're entitled to a pension. So what this normally does is, this is just a way to ensure a perpetual income stream during retirement. So technically, if you're employed by this company or for example, this government, you are contributing to this plan in one way or another. But what they're basically doing is, there's a set formula that takes into account how long you've been, how much money you've made, and so forth. And based on that, they will kind of give you a perpetual income stream for during your retirement. So there are some benefits for that. There's also a lump sum option as well. Again, depending on your plan. For example, if you've been a teacher for say 20, 25 years and you decide, I'm just going to, I'm going to retire maybe a little bit early. What they'll, the pension will actually say, hey, they'll give you an option where they'll say, would you like to take a lump sum option and just kind of take the cash, take the retirement money yourself and manage it yourself? In other words, put it to an RSP, or do you want to just stay in the plan and, when you come of age, your income will be guaranteed? So again, those are just, that's a plan that really, it's not some pension plans and defined benefits plans aren't plans where, ShariaPortfolio or any other financial institution can open up for you. These are, again, plans that are sponsored by your employer. Tax-free savings account. We spoke about this last week. Now, the retirement, the first accounts that I mentioned are strictly kind of goal focused on retirement. Tax-free savings account is not necessarily a retirement account. However, the account can serve multiple financial objectives. Retirement can be one. And there's some benefits to having this plan, tax benefits where your money can grow tax-free. And at the same time, when you withdraw from it, unlike the RRSPs and the RIFs, you're not taxed on the money that you're taking. So I think it's one of those accounts that works well when you have, say, an RSP. You can also have a TFSA at the same time, and they're kind of complementing each other in the sense that you're withdrawing money from your RSP or your RIF at that time, and at the same time you can take that money, and if you're not going to use all of it, put it into your TFSA, and that money continues to grow. And when you withdraw from that money, you're not paying any tax on it. So again, not to complicate things here, but again, another account that can serve as a tool, in your retirement. A couple of other accounts here. The non-registered investment account. This is basically an open-ended investment account where you can pretty much invest an unlimited amount of money. So unlike the RSP and the TFSA, where there's always limits to how much you can put, the non-registered is basically, there's no limit to that. It is a taxable account, so it's not tax sheltered. However, the benefit of having a non-registered investment account is that you can put a big lump sum in there. You can invest that money, and ultimately, in some cases, the non-registered investment account actually becomes your largest account because the fact that you can contribute as much, without any restrictions. Now, the last tool that I'll mention here is real estate. Now, the reason why I said real estate is because during my time, working with clients, at other institutions, especially, when you're retiring, or even just before retirement, folks are actually downsizing and they're empty nesting now. So, you're going from, in some cases, a family home where, you probably have 4 bedrooms and, the kids are not married and they're older and they've moved out now. And now you're kind of downsizing and maybe moving into a condo or some type of a retirement living situation. In that case, what typically tends to happen is, you've owned the house for many years. There's maybe no mortgage on it. And when you're moving to another, when you're downsizing into another, say, home or a condo, for example, you do at the end of the day get a windfall of cash, and that cash can then become, a source of your retirement, and you can actually take that money and park it into, for example, a non-registered investment account, or you can even put, with limits, of course, put it into like a tax-free savings account. So I included real estate as a tool only because it does serve as a critical part in everybody's retirement. I know for one, I will probably do that. I told my wife that, listen, once we retire, we're obviously not going to be in this house anymore. We'll probably be, living in a smaller location, right? So now, jumping to the introduction to retirement planning. Now, this is basically the process, and this is really how we, ShariaPortfolio, and our advisors here work with you. And, in some cases, this is not proprietary. You can actually take this slide and apply it to maybe another financial advisor at another institution, because this is very important in terms of how we, walk through and navigate a retirement planning process for you. So first and foremost, and this is the big thing, right, is that you're building trust and understanding. So, the biggest thing in this life for us, right, is your health, right? The second biggest thing is your financial well-being. So you got your health, and then you got your financial well-being. We're not, the dean, of course, is separate from this, but when it comes to deciding who's going to manage my financial well-being, it's an important process, and it's something where we take it seriously because ultimately, it's a tough thing to do because, and so this stage really is kind of an interviewing of some sort. You're doing your due diligence on any advisor, whether it's us or another advisor, another institution. I think it's very important to figure out, from your end, from as a client perspective, you need to understand that number one, right? Who are these people? The experience level. What are they going to? So it almost becomes a job interview. And for us, what we believe at ShariaPortfolio is that yes, we do try to align your values with your financial objectives. That is our that's our mission statement. And so we like to think that we are building trust from the get-go. So I didn't want to spend too much time on the first bullet point, but I do think it's a very important thing because ultimately we're dealing with a long-term relationship here. This is not just here you go, we'll see you in 20 years, right? Second thing, what we do first is after we've kind of gone through that first stage is setting retirement goals. What is retirement going to look like to you, right? This is something that maybe you can't come up with the answer in a day, but it's a thought process that we kind of figure out and figure out, okay, what is your life going to be like in your retirement years? Not everybody's retirement is the same. Some people want to travel, some people don't. Some people want to spend less during their retirement. Some people want to spend more. So these are all goals that we kind of have a discussion with for clients as far as what they want their retirement goals to be like. Then the third process is we're gathering data. So similar to maybe say what a doctor does with a patient, we're starting to gather all the information as far as what's their financial situation as it is today. Then we take that information and we, us being the financial advisors and the portfolio managers, we analyze that data to figure out, okay, what do the numbers really look like? What are the timelines and so forth? After analyzing that, then we do develop an investment plan. And typically here at ShariaPortfolio, we develop an investment policy statement for our clients. And that policy statement kind of outlines everything from your your required rate of return to your risk tolerance, to your time horizon, to any constraints that you might have, in the management of your investment. And so, kind of, putting together a long-term plan and in that plan, you will get our recommendation as far as what we think is the next step in terms of investing that money and how we should invest it. And of course, if you do decide to go forth with the plan, then yes, we do implement that plan and we invest it. And that's something that kind of like, after everything's signed and dated and said, okay, you know what, Bismillah, let's start this journey. Here at ShariaPortfolio, we then kind of, get the balls in motion. So whether it's transferring your RSP accounts and your accounts over to us, that's the first step. Once everything comes over, then, we go through the process of implementing our plan, as laid out. And then, of course, last but not least, we monitor the plan. This is a long-term timeline where, even during retirement, your objectives, your risk tolerance, things change. And so the plan constantly needs to be updated. Of course, may Allah, bless us with good health, but, along the way, sometimes health issues come about, and that can cause, changes in the plan, so to speak, right? So these are just, again, to kind of put in theory, and if you can kind of put yourself in shoes of an individual that's looking to make a retirement plan, just to get an idea as far as, okay, how is this process working? This serves as a guideline as far as, how we like to, speak to clients when it comes to retirement planning. So the next bullet point I'm going to talk about is time value of money. Now, this is not, some webinar is not intended to, I'm not here to reinvent the wheel here. In fact, a lot of what I'm going to be presenting is just stuff that we should know, but it's just presented in a different manner that maybe can get us thinking more and can actually, put things into perspective. So time value of money is very important. And the reason why I say that is, I did my CFA, and time value of money is a really important, it's an important topic in the curriculum. And we've seen you don't have to be a finance major, but we've seen the articles where they talk about cost of living, inflation, the dollar, what's it worth today versus what it's worth 5 years ago or 5 years ahead. So the best way to explain this really is not to go through a bullet point and try to make you guys students. It's to move on to the next slide. So there's something actually called the Big Mac Index, believe it or not. Okay, and then again, I'm not advocating or not promoting Big Macs here. In fact, my favorite burger is a great halal joint called Gladiator Burger. I encourage anybody in Mississauga to go out there. But the reason why I've highlighted Big Mac is because it is a hamburger and it has a long-term track record, and there's actually an index that speaks to this. So the index really is taking a lighthearted view as far as inflation and exchange rates, right? So I rather than complicate things and show you fancy inflation charts, right? I think sometimes when you simplify things to this level, it gets people thinking and to a point where they realize that, what, this is important and we should get started, right? So like in 1986, a Big Mac used to cost $1.89, and this is actually Canadian. In the US, it was obviously a little bit cheaper. But over here today, a Big Mac is $5.69. Now, this is over the span of 35 years. So you can see that, it is up over 200% during that time. And that really means that, on an annual basis, if you do the math, it's working up to about 3.2% as a price increase year over year, right? So just as a point of reference or whatever you want to call it, to get an understanding of, oh wait, in 1986 this is what it was costing me. Now today it's costing me 200% more, and it's been increasing every year at a rate of about 3.2%. So that's the Big Mac. Here's my favorite, actually. I'm a big Michael Jordan fan here. But this is when Michael Jordan first came out in 1986, this was his first shoe. And at that time, the Air Jordans were costing $26.86. Today, if you wanted to, go to the Nike store and pick out the latest Jordan, you'll see that that same brand today is going for $265. That's up over 900% in 35 years, much more than the Big Mac. And the average annual increase, if you were to kind of, spread it out, is about 6.8%. So, again, getting back to my point, right? I know we're not all buying Jordans and eating Big Macs during our retirement, but it just illustrating the fact that the cost of living is increasing as the years and the days go by. So now what's important is, how does your money keep up, and why it's important to still be in the game, so to speak, because if you don't, then this is really what your money is going to look like, in the sense that if you feel that you're just going to keep your money in the bank and that's your savings and you don't want to get into anything risky, this is actually metaphorically what's going on here. So I gave you a Big Mac example, I gave you an Air Jordan shoe example. I'm going to tell you, and just to kind of bring it all back, and again, we're not promoting McDonald's stock as we weren't promoting the Big Mac, and neither are we promoting the Nike, but just as a kind of, that's very interesting. During that same time frame, from 1986 to today, the McDonald's share price was basically priced at $2.70. Now, mind you, it's split adjusted, whatever, but at that time it was trading at $2.70. During that same time frame, the stock has grown to $213. That's up about 800% during that time. An annual average increase of about just over 13%. So, this goes back to cost of living, and then we're talking about investments. Again, not promoting McDonald's here, but just using this as for illustrative purposes only, right? And same thing with Nike. And in fact, Nike was even better. Back in 1986, you could have bought the share for 15 cents. Today, that share is trading for just under $143, up over 9,500%, and averaging a rate of return of about close to 22%. So, fundamentally, right, what I'm trying to really say here is this: the cost of living is going to go higher, and likewise, you need to we need to, as Muslims, as just really as members of this community, we really need to kind of keep up with with the pace of living. And so this kind of just serves as an example as far as how your money can potentially keep up. Now, again, we're not recommending Nike stock and McDonald's, but the difference that we do here is this: we're a promoter of diversified portfolios, and this is just a snapshot of some of the portfolios that we offer. And what it's really saying is we're not out here buying McDonald's and Nike stock individually. What we do is we create a diversified portfolio of a variety of stocks and different types of assets. And we have a portfolio what we think is for every type of investor, right? Where, for example, if you were somebody, and the financial advisor and myself, whoever you speak to, goes over this with you during our, that whole understanding and the whole, setting the goals. That's all a part of this. This ultimately, all that discussion formulates into something like this, where we decide, okay, where exactly are you on the spectrum? What are your goals? What are your risk tolerance? What's your time horizon? All that stuff kind of factors in. But the reason why, I put this here is because I had those two stocks. Now, those two stocks are just a small piece of the puzzle, could be small pieces of the puzzle in this portfolio, for example, right? And so, just one final thing I'll say is, if you're somebody who's aggressive, yes, chances are we build a portfolio where the bulk of it is in stocks, because that's where the growth is. Whereas if you're somebody, for example, who is maybe entering retirement or in retirement, maybe you're at the stage in your life where you want to preserve the growth that you made during this stage, and you're scaling it back down to here in the income and the conservative level, right? Again, different strokes for different folks. That's a conversation that we have with clients to kind of get a big picture. I'm not, this is not just, prescribing you a medicine, on first sight. We do a full due diligence on our clients to figure out, what is the best mix. So how do we get started? Now, there are a couple of things. Number one, you can do this on your own. Again, we're not going to mention any names here, but obviously, you can go online, you can, Google and figure out, okay, I can open up an account with ABC firm, and I can, do my own homework, Google and create your portfolio yourself. That's number one. You're buying and selling on your own. From a Sharia perspective, that's something, again, that you're doing on your own. I can tell you for a fact, doing this as a portfolio manager, Sharia compliance is not as easy as you think. Even some of the apps that are out there, I can say that, there's been discrepancies there. So, and we're, so again, not discouraging it, but just kind of letting you know that, yes, this is an option, but just please be aware that if you're trying to do this on your own, there might be some pitfalls, along the way, if you're doing it both from a standpoint that you want to fulfill your objectives, and at the same time, if you're trying to do it in a Sharia compliant way, right? Choosing your advisor, I think this is where we think this is our sweet spot in terms of, going back to what I said, where we try to align your values with your financial objectives. I think that's a powerful thing that what we offer, and we, so our motto really is we try to fulfill our clients' objectives with making sure that they adhere to their Islamic values, right? But outside of that, you want to figure out, okay, when you are, besides the whole Muslim factor here, and I don't mean to kind of, just go wholly on that, you should also look at your advisor's qualifications. Are they registered or not? In some cases, you might look at their experience. You can even look up your advisor, through like the provincial securities. You can even pull up a record on any advisor to see, for example, if they've had any complaints or whatever, right? So this is all a part of you doing your due diligence. And of course, when you come back to us, that's where we can kind of discuss with you our philosophy, our strategy, and see if there's a fit for what we're trying to do, inshallah. So the service levels that we offer, we have two levels of service. Number one is the Express. That's an economical solution where you can really kind of start with as little as $1,000. It's a low fee. You still get to work with a financial professional like either myself or Shamil. And this is an ideal economical solution, especially we think for new investors who are getting in that want to kind of get started, but they don't know where, and they might want to kind of consult with somebody like us. So that's number one. The other service that we offer is Access Solution, which is more comprehensive wealth management. The minimum amount for that is higher. It's actually about 100,000 right now. But with this portfolio, what we're doing here is we're customizing a portfolio. It doesn't just include exchange traded funds, but we're actually building a portfolio with individual stocks that you see and you own. It's just, in our view, the needs of the clients are a little bit higher in this service than say the Express. We offer all types of accounts from non-registered to RSPs to TFSAs, LIRAs, RIFs, RESP for the education plans. So ultimately, in conclusion, what I'll say is the value, like what, if you are thinking about becoming a client of ShariaPortfolio or not, like there in Canada, there might be a couple of options out there, especially if you're trying to do it in a Sharia compliant way. I think the big thing about us is that we are independent and we're a full service management firm. So those are two things. In other words, I'm not knocking the banks, but I've worked at a bank, and we are not a bank. There are some good things to working with a bank, and there are some not so good things for working with a bank. And I'm not going to go through that right now, but excuse me, what I will say is that being independent has its benefits. We are a fiduciary service. We're not product sellers. So in other words, we have the ability to really buy any product out there. Now, of course, as a firm, we adhere to Islamic standards, but we're not limited to a particular product. And so, and what that means really is, yes, we charge a fee for our service, and that's all we do. We charge a fee. We don't get any commission. And whether when we give you advice, whether you decide yes, no, maybe so, that fee is still going to happen. So in other words, what I'm meaning to say is that there's no conflicts of interest when it comes to us making a recommendation for you, right? Again, going back to the aligned values with financial objectives, I've kind of spoken about that. The other thing is we do manage the portfolios on a discretionary basis. So what that means is that once we have this discussion, we present you our investment strategy and you get an idea as far as, okay, this is what this portfolio is all about. Then ultimately we are managing the portfolio for you. So you don't have to worry about, oh, should I buy this? Should I sell this? Or those decisions are kind of left up to us. And what we're basically doing is we've obviously discussed the strategy, and going forward, we make the decisions as far as what needs to be in and out, right? We have an experienced team, alhamdulillah. Myself, like I said, I've been with the firm for 20 years. Nashad started the company way back when in 2003, and he's built a strong team in the U.S. and even here in Canada, where even my Shamil, although he's new here, but he's a great guy to work with. And then we also have our chief compliance officer, also based here in Toronto, Irfan Chaudhry, who overlooks all our compliance, and he's worked in the GCC and here in Canada with a variety of financial institutions and has a wealth of experience. So, and the last thing that I'll say here is this, that we do have world-class partners, and we do work with Fidelity Clearing Canada. And what that simply means is that when any client opens an account, the assets and everything are actually held with Fidelity. And when you're logging into, viewing your account online or anything, it's actually done with Fidelity. And if some of you folks don't know what Fidelity is actually the second or the third largest asset manager in the world. They have something like $3 trillion managed globally. So this is a world-class institution, and something that we try to reassure our clients that here are where your assets are held, so they get that comfortable feeling. So with that, I think that's pretty much it. We're going to kind of start off here with my favorite section, which is the Q&A session. So without further ado, I guess I'll pass the mic back to Shamil.
Yeah, thank you so much, Nadeem. That was very informative. and I hope everyone got a lot out of that. So now would be the perfect time for anyone who has any questions to kind of put it into the chat box and we can go over them one by one. So there is one question ready to go here. What are your views on Bitcoin, and do you see it here as a long-term investment for retirement?
Okay, so it's a very popular question right now, as far as Bitcoin and cryptocurrency. I mean, first of all, number one, from a Sharia compliance standpoint, excuse me, is it compliant or not? You know what? I mean, there are scholars who have come out that have endorsed the, or I should say, that have made arguments that it is actually compliant, and there are others that are kind of like still on the fence or saying no. Now, putting that discussion aside, and we as a firm, we're kind of right now at that juncture where we are looking at Bitcoin to see if it is compliant or not. As far as is Bitcoin something that you should add into your retirement? Again, of course, you should speak to your financial advisor, and we should understand the everything as far as how much or if you should put it at all, even, right? Because a lot of that's going to factor into what's your risk tolerance, what's your risk ability, and so forth. But however, I will say this though, I mean, it's not, especially during retirement, it should, because of the volatility of crypto and Bitcoin, it shouldn't be a big part of your retirement plan. Maybe a small allocation would be prudent, but again, it's hard to kind of answer that question and give you a fixed number. But in as a rule of thumb, what I will say is during a retirement, it shouldn't be a core position. If anything, maybe you allocate a small amount, in that portfolio.
Perfect. The next question we have here is, could we have several express accounts with different risks?
Uh, yes, and yes, you can. However, I would I would like to know maybe why that's the case. Like, for example, if you wanted to do it for, say, there's yourself, there's your spouse, and maybe you wanted to, like, as for example, let's just say you wanted to do that, one for yourself and one for your spouse, and for yourself you could say, you know what, I'm going to be aggressive, and for my spouse I'm going to be conservative. I get that. But if it's TFSA is one account at one firm, and with that we would just open one account. It doesn't. I don't see the. I don't see the. I don't think we can do it, to be honest with you. I think because it's a registered account as well.
Perfect. The next question is, can you help me understand the difference between a traditional government bond and a sukuk?
Sure, that's a good question. So, and I'm just going to explain it in a term, like, not as a finance professor, but in a way that everybody can understand. So here in Canada, for example, let's just say the government wanted to build a toll highway, like here in the GTA we have the 407, right? So what the government might do is say, okay, you know what, we got to raise financing for this, so we're going to issue bonds, and that bond's going to have a maturity, it's going to have an interest, and so forth, right? And people put money into their bonds and they get riba and so forth, right? That's how they do it here in Canada. That's what a traditional bond looks like. The difference here is with the sukuk is this. Now, instead of Canada, you might have a Muslim country such as Malaysia, Saudi Arabia, or whoever, right? And let's just say Malaysia wanted to build a toll highway. In this case, what they would do is, rather than doing the bond that I just explained in Canada, they have an asset. Number one is backed by an asset. That asset is generating a revenue. And the sukuk holder then is entitled to a percentage of the revenue that's being generated from the asset. And that financial structure operates more like a lease agreement than it does as a financing agreement. So that's just a simple kind of explanation as far as what's the difference between, say, if a traditional bond, say in Canada, versus, say, a sukuk bond in a Muslim country like Malaysia, right?
Perfect. The next question is, what is the fee range I should expect for an investment over 100,000?
Okay. So, we would obviously encourage you to, contact either myself or Shamal for this personally, because it does depend. But what I will say is that, we have tiered pricing. The 100,000 is the minimum amount for the access. The fee for that typically starts at about 1.5%. Now, depending on the portfolio that you're in, it may go lower. For example, if you're in a conservative portfolio, that fee might come down. But to answer your question on 100,000, the starting point would probably be 1.5%. But I would encourage you to reach out to us specifically and get an official quote.
The next question is, are you doing group retirement with employers?
Unfortunately, not right now. Of course, we'd love to, and we are looking at that. But as far as right now goes, we aren't in any group plans right now. And the reason for that is because that's really kind of dictated by is dictated by the employer. So, if you're, for example, if you're working for like a big company like Bell, they're normally going to go with an institution like Sun Life or Manulife or whatever, right?
Perfect. The next question is, can you have a portfolio with less Canadian exposure and more US exposure?
Can we have a portfolio with less Canada exposure and more? Well, I mean, our portfolios naturally have more US exposure than Canada. So it's not a question of can you have it is what it is. And so the reason for that here is quite simple is, our main goal is to have a diversified portfolio. And for a diversified portfolio, what that means is that you're going to be invested into different sectors such as technology, such as healthcare, consumer discretionary, and so forth. The Canadian market, the Canadian stock market is heavily weighted into financials, which are, of course, not permissible, energy, materials, and then everything else. And that everything else, it makes up a very small kind of component of the Toronto Stock Exchange market. Yeah, there's Shopify, and we own Shopify in some of our portfolios, but ultimately, you're really kind of stretching yourself trying to find Canadian names. So like perfect example is healthcare, right? There's not really a Canadian pharmaceutical or medical company that you can say, you know what, let's buy into this, right? So that's why the portfolio is still mostly weighted into the US versus Canada.
Perfect. The next question is, what would be the exact next steps to get started with us, I'm assuming?
Sure. So the best thing for that is we do have a link. Maybe Shamal, you could post it up where it's kind of like a get started link where you put your information, your name, address, phone number, etc., into the system, and then once you're in our system, either myself or one of our colleagues will contact you in terms of getting the account open. At that point, you would kind of just check off as far as what accounts you're interested in, and you go from there.
Okay, sweet. The next question is, where can I find a comprehensive list of Sharia compliant ETFs?
Well, I mean, I guess Google would be the first thing that I would say. Although, I mean, yeah, I would probably say, you can definitely, like, there's, first of all, the world of Sharia compliant ETFs it's not a huge list. Like our sister company, SP Funds, we recently launched the first global Sharia compliant REIT fund. We also launched the first Sukuk fund. So a lot of the ETFs that I know, that I'm familiar with, are equity ones, right? So, for that, you're kind of really limited to a small number. And again, you could probably Google that, and get that. I think the list you can probably count that list in one hand.
Perfect. Are the fees on the total amount invested, and are they on a monthly basis?
So yes, it is. The fee is on the total amount invested, and so the rate is annual. However, it is charged over. It is charged on a monthly basis. So, whatever that rate is, you pretty much can kind of divide by 12 and figure out what you're being charged. For that.
The next question is, do you support RDSP accounts?
Well, unfortunately, right now, because again, our back office is Fidelity, We don't have the RDSP option right now. We'll obviously, you're not the first person to ask about that. So we're hoping, inshallah, that, at some point, Fidelity will be able to offer that. And we can then at that point, put that as one of the accounts that we can offer.
Yeah. One question I get a lot from my clients is, how do you ensure Sharia compliance?
Oh, that's a good question. So, a couple of things. I mean, number one, internally, we subscribe to a system called Ideal Ratings, which is a software platform that a lot of the big Islamic banks use, and so this is basically what they've done is they've taken the ILFE standards, they've implemented on their software platform, and anytime we're looking at individual stocks or so forth, we're pretty much kind of using that system to do it. So that's an internal piece that we do, where we just kind of filter all our stocks. On the Canadian side, we are kind of in the final stages of getting a local body to give us a fatwa on Sharia compliance, and for that they would have to kind of overlook our business and almost like a Sharia audit and an advisor, where they look at it and what we're doing and make sure that we are compliant. So I would say we're kind of in the final stages of making that public. So inshallah, that would be kind of the third party assurance that we are a Sharia compliant firm. I know, again, this is separate from the Canadian business. In the US, the SP funds that we use, there's a third party Sharia audit that's done on them, and likewise, even the US practice, the wealth management business in the US, there's a third party audit that's done on the US business. So we're new to Canada. That Sharia audit has been happening in the US for many years, and it's been on our ETF since day one. But in Canada, we hope to actually have that as well soon, inshallah.
Do you invest in gold?
Yes and no. I mean, we've in the past. We've allocated, some of our portfolios. Actually, currently we do have gold in some of our portfolios, not all. In the past we've had gold in all of our models. And if the time is right, if we think that there's a good investment thesis to get into gold, we will add it. And the way we get into gold really is through an ETF. That is Sharia compliant.
Perfect. The next question is option trading Sharia compliant?
I can only answer that as the portfolio manager for ShariaPortfolio, and as a firm, what we've kind of decided on option. And we at this time, it is not Sharia compliant. That's the position that we've taken. The world of Islamic finance is always evolving, and but as of right now, we don't think it's Sharia compliant.
Perfect. The next question is, it's asking for a description of kind of what an ETF is.
Sure. So an ETF it's an exchange traded fund. This is similar to, I mean, in the old days, not old days, but previously you would know about mutual funds, for example. And mutual fund is basically a fund that has a basket of stocks and fixed income and other types of investments. With that, with an ETF, is the difference between an ETF and a mutual fund is that, number one, the ETF also has, again, a basket of stocks or investments in the fund, but that fund actually trades on a stock exchange. So you can actually buy it, at any given time between 9:30 to 4 o'clock when the market is open. And the benefits of ETF are typically they tend to be cheaper than mutual funds. They're very transparent, and they're liquid too, in the sense that when you're buying a mutual fund, you're getting a value, but you're getting it at the end of the day. So from that respect, it is, I would say, an upgrade above a mutual fund in the sense of some of its features.
Perfect. The next question is, how do you compare to competitor halal portfolios?
Wealth Simple's halal portfolio.
Just any competitors in general, really.
Okay, sure. Yeah. Uh, of course, there's going to be a bias here, and I'm going to say that we're better than anything out there in the market. So yeah, I do think we are better than the market because I'm look. I've been on the other side of I've been on Bay Street. I know what the firms are offering, and what I can tell you here is this: number one, we're independent, we're fiduciary. We can buy any product out there if we think it's in the best interest of the clients. That's the main important thing, is that anytime you're speaking to an advisor, you want to ask them, okay, fine, you know what, I know what you're telling me today is this is what you're recommending, but what if tomorrow I wanted to buy this? Could you do it for me? And so I think that's the thing, is that we have that independence, we have that fiduciary duty. And I think from a comparative speak, as far as what's the difference between us and some of the other halal options, is that our access service, especially, right, it's customizable. It's everything that you would get at any of the big bank wealth management firms. You own the stocks in your portfolio, you get access to a portfolio manager like myself. And as far as the fees go, we're very comparable to some of our counterparts. Specific to our ETFs, such as SPUS or SPSK or SPRE. First of all, SPRE, which is the real estate fund, there's no other fund out there right now. There's no Sharia compliant real estate fund out there that's traded on an exchange right now. Number one. Number two, same thing with the Sukuk. There's no ETF Sukuk out there, and our Sukuk is just tracking the index, right? So that's number two, right? And number three, as far as the SPUS goes, right? We last year the SPUS, it did about 24%, from January 1st to December 31st, and we beat the S&P 500 by about 8%. I think the S&P was up about 17% during that same time. Some of our, the other ETFs out there, and let's say, for example, Wahid, we outperform Wahid as well. So, I would say, yes, it's only 1 year, and I'm not saying 1 year dictates, what's going to happen for the next, 5, 10, 15 years. But, out of the gate, yeah, alhamdulillah, we had a great year, and when you compare it to our peers, we're happy how we performed. Our access portfolios, I would encourage you to, contact me, and I can even share that information with you, because alhamdulillah, we did quite well in those as well.
Perfect. The next question is, how much is ShariaPortfolio managing as of today, roughly?
Well, I mean, look, we're a growing firm, and in the U.S., we've been around, like I said, for about 17 years now. As a whole firm, when you count, all operations, we are north of 200 million. In Canada, we're relatively new, but I would say this, every day we're bringing on new clients. Every day, the amount of interest in our firm, alhamdulillah, is growing. And I said this to Noshad when we started, is that we're in Canada, and you got to understand something. The growth in this business is going to be just like a hockey stick. And a hockey stick is a perfect example to use for Canadians, because this is what's happening right now. So, you know what, we're at a stage where we are managing basically about 8 figures right now. And I would say that, inshallah, we'll be at 9 figures, hopefully soon.
Perfect. The next question has to do with investment strategy, wondering kind of what your investment strategy looks like.
Sure. So, I mean, we do what's called a core satellite approach, and I think this is probably the other thing that makes us better than maybe some of our competitors or some of the other options that are out there, right? Is that we're not just about the ETFs. We are also about actively managed individual stocks. So the core satellite here is this: the core are stuff like the Sukuk ETF, maybe the real estate, and even the SPUS. These are kind of how you first build your portfolio. Satellites are more like where we actively manage that portion, where we're actually, making an assessment on the market, where we think the opportunities are, where the risks are, and we position our clients accordingly. So with that strategy, we are using individual stocks to capture that theme. So for example, let's just say we're, for our growth clients, we're bullish on, say, for example, EVs, just to kind of, pick an example. We would at that point, look for maybe an EV name or two to take that position, right? Likewise, if somebody who is on the conservative side or the income side, that might be somebody who is looking for income. And so what we're then doing is we're trying to look for the best income generating ideas. And that could include something like a good value dividend paying stock.
Perfect. That pretty much concludes all the questions we have at the moment. But yeah, again, thank you so much for everyone coming out today. And if you do ever have any questions, you can contact myself or Nadeem. Our contact information is on the screen. Did you have any last second things to add there, Nadeem, before we sign off?
No, again, I just wanted to, again, thank everybody, Jazakallah khair, everyone for taking the time out this evening to join us again. Again, our information is there. Just to kind of, do a plug here. We do have another upcoming webinar in March, and you might be getting an email about that. And after we're done with RRSP season, we're going to be, we're bringing actually in a global tax specialist who's going to be talking about global taxation. So if you have any family or friends that, for example, are working abroad and are looking for a global tax guy or just want to hear him speak, this is definitely going to be a webinar that you want to attend. So we will be emailing the details out, or if you follow our Facebook page or on LinkedIn or whatever, you should see the post for the details for that webinar coming shortly, inshallah.
Yeah. So again, thank you everyone for coming out. And yeah, we hope to hear from you soon. If you have any questions, feel free to reach out anytime.
Thank you. All right.
Thank
Assalamu alaikum.
you, everyone.